This is the big picture analysis of the US dollar JPY. I'm going to give you a lesson in cycle analysis. Cycle analysis is the core of the work that we do here, and we're going to be teaching this throughout this entire show. It's made up really our analysis of three different components, and if you go further into the analysis later on in the show that I do on the NASDAQ, I'm going to really take that into some deeper analysis, and you will really get descriptions of how we do this analysis. But I'm going to show you right now how we do the cycle analysis aspect of it, and I think you're going to really love this. So this is a chart of the US dollar JPY on the monthly. So this is pretty typical of what a lot of people would look at. Candlestick chart starting out with basically a blank palette. This is a monthly chart that we're looking at here, and you can see what's going on is this big upside move. This is a reflection of the decline in the Japanese yen, because this is the reciprocal. This is US dollar versus JPY, so when the dollar goes up, this then tells you how many yen to the dollar. Right now trading at around 130 yen to the dollar. So as the yen goes down, these numbers go up. And you can see in here lots of squiggles, and maybe very tough to identify when it's going up or when it's going down, and how long it will go up, or how long it will go down, or how far it will go up, or how far it will go down. Those are challenges that traders and that analysts really struggle to meet. So what I'm going to do is I'm going to advance this to a few more different charts so that you can get an idea of what our work is. So now what I've done in here is put in what we call cycle brackets and timelines. What this does is actually show you the rhythms in the market. Now this is not a study, this is a drawing tool, and the work in here is done manually. But this shows you the rhythm in here, the rising phases and the declining phases, and you can see how clear those are. There's actually, in each of these harmonic families, there is a dominant cycle and a minor cycle in this case. Some cycles have 3 or 4 minor cycles in them. Where do the minor cycles line up? Well, you could see right in here the advance, and where it peaked way on the left side of this cycle, which is called the left-hand translation, and the decline into the halfway point, the rally again, and the decline where both of these push down and push it down very hard. You can see the end of it right over here fell hard, the end of it here fell hard. When you get two rising cycles moving, you get the big movement on the upside. As you can see in each of these right in here, where they moved up, this one of course failed early, and you can see that right in here. This was a bullish triangle that formed, and when it broke out, and I'll show you that, it took off on the upside. The dollar versus the Japanese yen taking off on the upside. And you can see right in here that this cycle right here is actually coming towards the end period right in here of the minor cycle. It has had no drop in here whatsoever. Now let's advance this to the next set of drawings, which takes the analysis even further. Now what we've done is put in the cycle lines on the top, where we're showing you the harmonics in here of 25 and 50 months, and also showing you how we then project. And I have one more chart that's going to help you with that. So this shows you the dominant cycle, and it shows you the minor cycles right in here. When you have a minor cycle that is very strong and then pulls back with almost no time to go, the next minor cycle is very likely to push up very hard on the upside. You could see that beautiful cycle pattern right in here with the two minor cycles very clear. Here's your two minor cycles right in here, but this was in a consolidation. So when this cycle peaked very early, then it set up this consolidation period. You can see in here now that we're beginning to project, and that is that the minor cycle comes down for a brief period of time. In other words, the energy, the corrective energy comes down, but it fights this much stronger, more dominant energy it doesn't have much ability to fall, and then it begins to go up again. That's exactly what happened in here. The downside minor cycle didn't have enough energy to defeat this strong energy of the more dominant cycle, a small decline, and then a big advance. You can see the similarity right here and right in here, and actually right in here. I'm going to highlight that for you again, and as we move into this area right here, and it gives you a lot of clarity about how these cycles line up. What we have in here are the green areas, are the positive translations, small corrections, and big jumps that follow. Right here, right here, right here, right here. You can see that. This one didn't give you much because it was a negative cycle. And this one right over here set up to move to the upside. I have put in the target zones right there, and these are based on the Fibonacci extensions. And that says to us that there is a potential for, after some minor decline in here in the dollar versus the yen having a bounce, that this will move up. This points to about 139 to the dollar. This over here is about 149 to the dollar. And this is about 152, 153 to the dollar. So this is how we do our targeting in here, as we use the information that comes out of the cycle formations, add in the information on the swing high, swing low analysis, as we call it, with our projections. If I don't have any momentum conditions on here at all, but were I to be showing you that, it would be also showing you the positive momentum conditions that are existing, which is the third component to our analysis. So this is very clear, and you can see that clearly. Each of these green zones, when you had the minor corrections, each of those were followed by good advances. That's due right in here. You're likely to get a yen bounce or a dollar pullback in the US dollar JPY, and then be able to see the next advance that comes after that. So this would be in this decline into what we would have as a buy zone on our shorter term charts, and then using that pullback in here for the very likely next move to the upside. Of course, Bank of Japan came out today and said they are going to defend the yield curve, not let interest rates go over 25 basis points, without any regard to any control of the damage they've done to their currency, and rather than just letting interest rates float. Of course, they can't do that because they're the largest indebted country in the world. And so what they have to do is continue to maintain low interest rates so that they don't go into economic collapse. But the collapse of the yen, which is very likely going to continue, is going to give them plenty of problems as they take on the inflation of the rest of the world. Everybody's importing, especially the U.S., our inflation to them, and what we're getting is something that's disinflationary. And that eventually is going to affect the dollar, but not quite yet. So what we see in here is all of our cycle analysis. I hope that's very clear to you. You can learn cycle analysis by going to askSlim.com and sign up for our cycle analysis workshop. If you go to that tab on the top of the page where it says workshops, there's great videos and information in there that just tells you about it. You don't have to pay anything. Of course, you may decide to take the workshop like hundreds and hundreds of other people have done before. So this is a lesson in cycle analysis, and the reason we believe that the US dollar JPY will pull back temporarily and then begin to move up again. That is the big picture analysis, US dollar JPY, and my lesson in cycle analysis. I hope you found it incredibly illuminating.